Hello traders, and welcome to the third video within section number 5.5 of the IPDATrader's private mentorship course, where we're going to be talking once again about trading plan. Now, as I've been telling you guys all the time, this is the video where we're going to be actually creating a sample trading plan so that everyone can have an idea on what to expect in terms of building a trading plan. Okay, so it's going to be pretty simple, guys. I have two screens. And screen number one, I've got all the parameters that we went through in the previous video, and we're simply going to be going over those and creating a potential trading plan, okay? So without further ado, let's actually get started over here, okay? We have a Word document open, and we're going to get started. So if you remember properly, and once again, if you do not have two screens, there's no big deal. Just simply go ahead and write all the parameters down in a piece of paper and go over them, okay? It's not difficult at all. So as we said, guys, first parameter is going to be determining our pairs, okay? And this is actually directly correlated to the time frames you're going to be working with. And let me explain this a little bit further. So if you have the ability to look at the charts for a very long period of time, and you actually enjoy trading lower time frames, you might want to be reducing the amount of pairs you want to be looking at, because otherwise it's going to get very confusing. Now, for me, and once again, we're doing this specific example based on me, I want to be looking at multiple pairs because I like to trade a little bit of higher time frames, right? In terms of my points of interest, my structural plays and all of that, right? Mainly based on the 30 minutes, 1 hour, 2 hour, up to the 4 hour time frame. So for that reason, we're going to be looking multiple pairs. And once again, in order for you to determine the pairs you want to pay attention, you have to review the questions, right? Are the chosen pairs in session? Do I understand the spread behind the pair? Have I watched the pair long enough, right? Those are key ideas you want to be understanding when picking your pair. So once again, for me, we're going to be keeping it rather simple, and we're going to be choosing Euro USD, GBP USD, which for me is the best pair to trade in my personal experience, follows the daily cycles theory very well and all of that, right? So it's pretty amazing. GBP USD, gold, gold and GBP JPY. Those are the pairs that I mostly like to focus, okay? So those are the pairs that I'm going to be choosing for this particular trading plan. And that means that I'm not going to be trading anything else, okay? If I see a setup in a different pair, but it's not within my pair list, then I'm going to be avoiding it. Reason being is because you really need to respect yourself and respect your plan in order to make things work, okay? So pretty simple. Pairs, we have these four, and we're going to say, I understand that EU, GU, and gold, right, may be correlated during specific periods of time, okay? Because once again, you want to understand the spread behind the pair. You want to understand if they are correlated. I'm gonna also say over here, I need to pay attention to GBP, right, and USD and fundamental outlooks. That's also pretty important, mainly because my pairs contain the USD and I do have a 2 GBP pairs, so that's why I added the pound over there. Those are things you want to understand. And once again, this is a sample, guys. As long as you're covering all the parameters, you're good. You don't need to do things exactly how I'm doing it over here. I'm just trying to help you out, giving you an example on how a trading plan could potentially look. Because really, people get confused, and it's not that difficult. It's just a matter of understanding how you want to be doing things in the market, okay? So the next parameter over here is obviously going to be the, let me check over here, the sessions that I'm going to be trading, or a specific time in the day, okay? So we're going to be doing that. Pretty simple. Let's say over here, sessions. Sessions. Okay. So sessions for me, I like to trade just as London opens, because that way I have both Asia liquidity pools open most of the times, or probably one is still going to be open, and I can frame trade ideas and how the daily candle might look for the day based on that information. So for me, I like to trade London session and New York session, right? And we're going to be determining specific time frames, right? And sorry, time periods. Do not worry about that. So let's say once again, this is all based on UTC London time zone. Okay, you might have to adjust for yourself. So yeah, that's okay. We're going to be saying that I'm going to be opening the charts at let's say at 7:30, right? So I can have 30-minute time window of actually looking at what is potentially happening and what do I expect for London Open. So I'm going to be giving myself that 30-minute time window, okay? And this is important, guys. That doesn't mean that I'm going to be waking up at 7:30. You actually have to wake up a little bit earlier than that because you want to make sure you've done everything you need to do before sitting in front of the charts, right? You don't want to be running into your computer like a zombie. No, you want to take the time to shower, maybe dress up, whatever you need to do, breakfast, right? All of that. Give yourself some time. But for me, I want to be sitting in front of the charts and ready to trade at 7:30, and I'm going to be trading most likely till 12, right? And then I'm going to be taking a break, and I'm going to be coming back for New York Open at 2 p.m. and I'm going to be staying here to maximum 16, okay? So 4 p.m. Once I cross this time, I can no longer execute positions and I'm going to be done for the day. Now, are there any news during my session? Well, you need to be keeping track of that as well, okay? You can make a note over here, check the news for my sessions, and you can say to yourself, let's do something like this. Sorry if this is not looking too clean, but the information I believe is getting across successfully, so that's what's important at the end of the day. I know that volatility is to be found during those periods of time, okay? So you make sure that you understand that volatility is there when you're trading and that you understand the news that are coming up for your session, okay? And in terms of being able to trade those sessions, in terms of your lifestyle, obviously you have to adapt to that, okay? So for me, I'm able to trade this session because I have the ability of looking at the charts during those periods of time, day in and day out. If I had to work a full-time job during those periods of time, I would most probably stick to the Asian and Sydney session, to be honest, because once again, with the understanding that we have in the daily cycle, we can absolutely trade those periods of time successfully as well, right? So let's actually move on to point number 3, which is going to be risk management, okay? So once again, that's the most important thing in your plan, in my opinion, okay? Risk management. Now, how are we going to be doing that? Well, we're going to set the example that I'm going to be trading with a $10,000 account, okay? That's the idea over here. And I'm going to be doing the following, okay? Let's say we have a 3 max trade per day, going to be 2% risk, 2% max risk per day. And once again, you should understand that this means that I'm not getting above the 2% drawdown if I ever reach that, okay? Not a single day I'm going to be getting above that. That means if I lose 1.99%, I'm going to be done for the day, okay? You don't want to be going over that because otherwise you have no discipline and you need to follow what your plan says, okay? You need to respect yourself. So in terms of how I'm going to be measuring my daily risk, you have the answer right here. It's a 2% risk over here, okay? In terms of setting weekly, daily, monthly goals, if you're not profitable yet, weekly goal, end the day, end the week in profit. That should be your only goal if you're not profitable yet. If you can have a profitable week, once again, whether that is $1, $10, $100, I don't care. If you have a profitable week, you are beating 90% of other traders out there that lost for the week. Okay, please understand that and pressure that idea very well because it's extremely important. So I understand that I'm going to be taking a maximum of 3 trades per day. that I'm going to be losing a maximum of 2% risk per day. And let's say in terms of when I'm going to be done, if I'm actually doing the things properly, I'm going to send 2% profit. I am done for the day. Okay, and once again, you can take your time with that. I'm doing a sample over here just so I can make sure everyone understands what we're doing over here. Once again, let me repeat what we have so far. We've determined our pairs. We've understood the correlation between those. We understand the spread. We understand the fundamentals that we need to pay attention to. Number two, the sessions. When are we going to be trading? Well, I'm going to be focusing on the London session and New York session. Whoops, how can I go back over here? Yes, that works. And these are the specific times that I'm going to be looking and actively trying to trade. And that's it, right? I don't care that trader B is taking a Euro USD position at 5 p.m. I'm not going to be getting involved into that because you need to respect yourself, please. Understand that. Now, in terms of risk management, the most important aspect of your trading plan. Let's imagine we have a 10K account. We're going to be taking a maximum of 3 trades per day, right? And that means if I take 3 trades and I lose all of them in my first 2 hours of the session, I'm done for the day. I'm not going to be looking for executions. I'm going to be journaling my trade. I'm going to be going over the trades that I lost, and I'm going to be trying to understand what happened over there. That's it. I'm going to be risking a maximum of 2% risk per day, which means I can either split my risk, or if I'm very comfortable in that position, I can put all of that, right? Let's say I can put my 2% risk into a gold position if I believe that that is absolutely going to work for whatever reason it may be. And that means that if I lose that gold trade, I'm done for the day. My weekly goal is going to be ending in profits. And if I reach 2% profit, I am done for the day, right? And I'm not going to be worrying, trying to get back in to make a little more, because what tends to happen is if you have a $500 account and you make 2%, right? You make $10, you think, oh, that's not enough. I want more. But no, you need to respect yourself, guys. You're making 2% a day. That's huge. That's massive, okay? Go and speak to a bank, let them know, ask them how much they will provide you per year in terms of returns if you allocate some capital over there, okay? It's going to be 1% a year, 2% a year maximum. So if you're doing 2% a day, you're absolutely doing phenomenal. So appreciate that fact. So with all that being said, guys, once again, we're taking it easy and simple. We're going to be jumping into the technical aspect of our trading plan over here. So let's go over here. Let's say technical analysis, right? This is where we want to be spending a little bit of more time in terms of this parameter over here. So let me check my PowerPoint presentation. I have that in the other screen, and we're going to be going over the parameters. Once again, the first thing that you want to be asking yourself, what time frames will I be working with? And for me, this is pretty obvious and simple. I'm going to be mainly 45 minutes, 1 hour time frame, 2 hour time frame, 3 hour time frame, 4 hour time frame, up to the 8 hour in terms of my points of interest and stuff, right? This doesn't mean that I'm not going to be quickly jumping into the daily or weekly to get some perspective. It just means that my main time frames to operate and do analysis are going to be the ones that I'm picking over here, right? In terms of executions, I'm going to be focusing on the 1 minute, the 5, right? 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, right? And those are my execution timeframes. And once again, pretty simple and easy to understand. You need to respect this type of information over here, okay? So let's talk a little bit about structure. How do I determine my structure? And once again, we're going to be doing this very simple. So in terms of determining my structure, I need to identify a expansion and break. Nevertheless, I'm still going to be keeping the higher time frame narrative in mind. That's why I say you're still allowed to jump into the daily, weekly and stuff, right? But at the end of the day, let's say I identify some sort of break in market structure in the 1 hour time frame. Well, then that's going to be my expansion leg, and I'm going to be waiting for some sort of retracement to potentially continue up, okay? And that's going to be my structure play that I'm going to be working with. I need to identify an expansion, and break, right? With the time frames that I've listed above. So the 1 hour, 2 hour, you get the idea. Okay, I'm not going to be typing everything out. I need to identify an expansion and break. And that's it, right? That's how you determine your structure play. It's that simple. Once again, if you go through my YouTube channel and you review the step-by-step directional bias, this idea should make sense to you, okay? You want to be identifying a break and you want to be working with that, okay? If you have a break in your direction, you most probably have an expansion of the range. So all you need to do is wait for that retracement in order to take that continuation trade, okay? So very simple. I need to identify an expansion and a break, right? So that's extremely easy and simple. I can also look at swing points for more information, right? For more information. That's extremely easy to understand. Now let's move on and let's talk a little bit about the liquidity criteria. And once again, you can add more things, you can add less things, whatever you're comfortable with. Okay, this is just a sample trading plan. So let's go over to our liquidity criteria once again. So liquidity needs to be grabbed or engineered within within my POI in order to consider this aspect fulfilled. Okay. Whoops. Typo over there. Yes, that's fine. So in order for me to have my liquidity criteria fulfilled, I need some sort of liquidity to be grabbed into my point of interest or engineered within my point of interest. That's me, right? If you don't like the idea of liquidity being engineered in your point of interest, you can remove that. You can say to yourself, hey, in order for me to consider my liquidity aspect to be fulfilled, I need liquidity to be grabbed into my point of interest, okay? So, and in terms of liquidity, hidden and visible liquidity are both valid, okay? So that means whether that is hidden or visible liquidity that is being grabbed, that's going to fulfill my aspect. And I'm going to favor Asia highs and Asia lows because in my experience, those are the most effective liquidity pools you want to be, you want to see grabbed into your point of interest, okay? That's going to serve you extremely well in terms of actually confirming your liquidity criteria. So that's for me, okay? Now we move on. What is a valid POI? Let's talk a little bit about POIs. What is a valid POI? Okay, so I'm going to be saying only discounted areas, right? Meaning 50% plus, or if you want to be doing things a little bit different, you can say only POIs above the 61%, right? Both things work, both things make sense. So that is completely up to you in terms of how you want to determine your point of interest over there, right? For me, it needs to be above the 61% retracement in order for me to consider the POI. And once again, this refers back to your structure play, right? So 60% of the expansion leg, okay, that I'm working with, and that's going to eliminate tons of POIs and essentially remove and avoid taking bad trades, because if you're only waiting for POIs above the 61% of the expansion of the range, then you are waiting for discounted areas which are much higher probability, okay? I am avoiding liquidity POIs. Okay, that means Asia highs, Asia lows POIs, right? Because these liquidity pools can also be part of POIs, and generally speaking, you want to be avoiding those. Let's say POIs that are sitting at double tops, double bottom, right? Double top, double bottom, or trendline liquidity. Those are the POIs that I'm going to be avoiding. Even if those POIs are sitting above the 61% of the expansion leg, I'm still going to be avoiding those because those are liquidity pools and they're likely to be used to induce people, or they're likely to even get taken out at first, okay? So that's the information that we want to understand in terms of POIs. And once again, I'm not writing this over here, but you should. These POI criteria apply to these time frames over here, because these are the time frames that I like to use. If you want to be a scalper, you can change things up. You can say, I'm going to be working with 15 minutes, 5-minute, 10-minute POIs, and I want liquidity to be grabbed in those time frames, and that's it. And you're not going to be caring about the 1 hour, 2 hour, 3 hour, 4 hour, and so on and so forth, right? But nevertheless, you still want to be keeping a high time frame narrative in mind all the time. That's something that I want you to understand very well. So let's talk a little bit about confirmation. And once again, you can be adding pictures to make these ideas clear to you. But for me, I've been doing this for a very long time. I don't need that, okay? But for you, if you're new, if you're not so sure in terms of the methodology and stuff, you can always add pictures to have a reference point for yourself, okay? So confirmation, let's say we want to be using the protocol, okay? I am going to be following the protocol, right? Meaning external and internal shifts, okay? Which is nothing more than 2 order flow breaks over there. So I'm going to be following the protocol and its variant. You guys know the variant. It's posted in the library section. You guys know that sometimes you can use it. You guys know when you're most likely want to be using that. So that means that in order for me to confirm my entry and to execute, right, only add POI mitigations, okay? That's essential over here. You don't want to be looking for the protocol anywhere else, in my opinion. Well, if you practice that idea and actually makes sense to you, then you can do that. But for me, I like to be safe in that sense, and I'm only going to be looking for my protocol and its variant at add POIs over here, okay? Now, risk entries. I can use risk entries, right? And I'm going to be saying lower risk if I have a high confluence trade, meaning if you're 100% sure, and once again, we should never be 100% sure, but you get the idea. If you're very confident in that price is likely to reject at this area over here. Let me actually bring up my drawing tool over here. It's going to be extremely beneficial for the understanding, I believe. So just give me a second. I'm opening the drawing tool and we're going to be discussing some idea over here. Okay, great. I have that now over here. Yeah. So that means, guys, that let's say you have an example over here. This is your point of interest. This is your Asian range, right? Let's draw some price action. Let's say this is your Asian range. Very simple, range in market. This is your point of interest over here, right? Your bullish order block. And if you say to yourself, hey, I've seen this plenty of times happen, right? You see the Asia low get taken out. Frankfurt comes in, right? Rates the low. Midline test over here. And if you know, and if you've seen before that as price is going to be tapping here, it's not going to provide any sort of confirmation, and you still want to be involved, then you can add to your trading plan once again risk entries. Okay, if I have a high confluence trade, if this is a high confluence trade for you, you can take a risk entry over here without a confirmation, and that is still going to be part of your trading plan over here. So no big deal with that. You can say to yourself, hey, I've seen this setup so many times, I'm not going to be bothering with looking for an confirmation. I may want to lower my risk, as once again I'm not waiting for confirmation, and I want to take a buy position as price trades into my point of interest to continue up and take the Asian high, because I've seen this happen so many times that I'm very comfortable with it. I don't require a confirmation. Okay, and you take a risk entry and you have it on your plan over here, so you're doing everything correctly. Now, whether you want to be taking that at the open or you want to be splitting your risk and taking some more risk as price is hitting your 50% of the block, if it actually does it, then that's great. As long as you keep your stop loss below your invalidation point, you're going to be good. And if price comes and trades below your invalidation point, then you're out, but you used a lower risk because you understood the risk you were taking, and that's it, right? Very simple to understand. I hope that this idea was easy to understand. So we have protocol entries, we have risk entries, and let's say that you are very confident in terms of how you read order flow delivery. You can say order flow breaks may be considered as entries, and that's it. And if you see some order flow breaks that you like, then you can be doing that, right? And you can say to yourself, hey, I've seen this many times, 3 breaks in order flow. I'm going to be executing right now. So that's in terms of your confirmation. Okay, let's move a little bit and talk about the daily cycle. Daily cycle. Let me actually check my daily cycle key times. You want to be adding them over here, okay? So let's say we can add them. Let's say Sydney, and once again, daily cycle key times based on UTC London over here. Let me see. Yeah. So as we were saying, guys, let's say over here Sydney from 10 till 12. Okay, then we have True Asia from 12 till 6 a.m. Right, and you get the idea, guys. I'm not going to be wasting my time writing all the key times. If you don't know those, you can always review video number 2 in this section. You will find access over there, okay? So blah, blah, blah. We write all the key times and we say to ourselves, if a setup is spotted during those periods of time, my probability of winning is going to be higher, and I want to manage accordingly. Okay, very simple. That means that if I take a buy at London Open after taking an Asia low, then I may want to be using a higher risk, because I've seen that many times. We have the daily cycle in confluence, we have a high probability trade. You want to be exploiting that, right? Nevertheless, you still want to be within your risk parameters, okay? You cannot get above this over here, 2%. Once again, this is an example. If you're comfortable with losing 5% a day, you can do that, even though I would not suggest it, okay? Because you have a bad week, you're down 20% on your account. I don't know if that's something that's psychologically not going to affect you. But once again, trading is individual. Feel free to essentially work with that in the way that makes sense to you. Because at the end of the day, we're individual traders, okay? So pretty simple. This is just a sample trading plan, okay? And once again, I'm explaining everything here and the variance and what you can add, what you cannot do, and all that sort of stuff, right? I highly suggest if this is the first trading plan you're creating, you want to be adding pictures as reference and guidance, okay? Because you may need that. So I did that in the past multiple times, okay? This is just a sample plan over here. So let's move on to our trade management criteria. I hope the technical aspect is explained successfully. Nevertheless, we're still going to be going over it once again before actually moving into trade management, because I want to make sure everyone understands this, okay? Technical analysis, always keep in mind higher time frame narrative. Another thing is, what time frames do you want to be working with? And once again, you decide that based on your lifestyle. For me, mainly 45 minutes, 1 hour, up to the 8 hour in terms of structure, POI, and liquidity. And my executions are mostly going to be available within those time frames over there, okay? Structure play, I need to identify an expansion and a break, right? Pretty simple. Let's do that once again. You have a market like this, right? Let's say like this. This is your manipulation of the highs over here. This is your most recent break. You're now considering this point over here as your expansion, and you say to yourself, hey, I'm bearish in this market. This is my most recent break, and structurally we're bearish within this time frame. And if you check the higher time frame narrative and that lines up, that makes sense for you to expect a retracement back up into a discounted area for sell. Then this is your bias, and this is how you determine your structure, expansion, break, and retracement, okay? You can always review swing points for more information. That's clear over there. All right, so that makes sense as well. Let's remove all the drawings. Let's move on to the liquidity criteria over here. And this is extremely easy as well. Right, liquidity needs to be grabbed, engineered within my point of interest in order to consider this aspect fulfilled, okay? Whether that is hidden or visible, completely up to you. And I'm going to favor Asia highs and lows because those are extremely powerful liquidity pools. In terms of POIs, only discounted areas, right? You can work with 50% plus, 61% plus, whatever you want to do. And I'm avoiding liquidity points of interest. This is crucial. Asia highs and lows, POIs, double tops, double bottoms, trendline liquidity. You guys know it all already. Moving on to confirmations, only at POI mitigations, right? Extremely crucial. I'm going to be following the protocol, external plus internal shift and its variance. I can use risk entries, lower risk if I have a high confluence trade. Order flow breaks may be considered as entries. Well, what does that mean? It means that if you are seeing, let me actually draw an example. This is your bearish POI, right? You see something like this where you see multiple one order flow break, two order flow break, three order flow breaks. You see that, and you are saying to yourself, hey, we've manipulated highs, we've tapped into the POI, we've broken 3 layers of order flow, right? I'm not necessarily going to be waiting for the protocol in this case, right? Because I believe that as we come back here, we're likely to reject once again and continue lower for whatever reason it may be. And that way, you can always execute on those ideas as well, okay? So you may want to have different ideas in terms of that, but that's for me what makes sense. So we understand that. We understand that the daily cycle, and if we have a setup during those periods of time, right, there's more to it. Review video number 2 once again. Then I'm going to have a high confluence trade. I can maybe up my risk a little. And once again, only if you're comfortable with it, okay? Don't take my word as the truth, okay? If you have not seen it develop and how these different times actually make sense, then don't do it. Give yourself some time around that, right? Give yourself some comfort, okay? And say to yourself, hey, I may want to be upping my risk once I'm actually comfortable with what I'm doing, okay? So that's that. Let's actually finally move on to the trade management criteria over here. So in terms of trade management, guys, it's pretty simple, right? I'm going to be doing C risk management system. And once again, you have all the information in the section number 5, which you should actually watch before this one. So I'm not sure if you're confused with that, how to help you, because it's pretty simple. You have to create your own risk management system. You have the criterias in section number 5, and that way you will have a probability and understanding in terms of how I want to be managing my trades. I am allowed to make judgment calls. This is crucial once again. Even though you have a risk management system that is going to guide you through your trades, if you see something that you don't like, you are allowed to either close partials, close your positions, move your take profit, move your stop loss. You should have total freedom in that sense, even though you're still going to be following that plan. Okay, you need to find once again that balance and sweet spot. Am I comfortable with my gains? You should be, right? So let's say I am comfortable with my potential gains, losses. Extremely important as well. Lastly, journaling, right? Pretty crucial once again. Journaling is part of trade management. So let's say 5.1, journaling. And for me, I always recommend you use Notion, completely free and easy to use, okay? And parameters, right? Let's say over here, parameters. I want to keep track of time of the execution, right? As I explained to you guys before, you want to be including the week, the day in the month, the time you actually executed the trade, the session that was, all that information, okay? Your idea behind the trade, right? So let's say before and after picture, right? Before meaning as you execute a trade, and after meaning as you're done with the trade and the result, right? And this is crucial, full on explanation of my idea behind the trades. This is the important thing. You really want to be doing this, guys. You want to be writing it all out. What was I thinking? What is the idea behind the trade? What is the idea behind the trade? What actually occurred? How can I improve improve it next time? What are things to learn from this potential win loss? How can I replicate it tomorrow if that was actually a successful and winning trade? So guys, that is it in terms of your trading plan. Okay, this is a sample plan. Once again, you're free to change things around. I did this, sorry, rather quickly, but feel free to take your time with it. You don't have to rush it. Add things that you consider important, avoid those that you may not consider important. Add screenshots in terms of helping you out with what you're actually trying to say in terms of your technical analysis, whatever it may be, right? Feel free to add screenshots of that and essentially cover all the criterias, okay? That's the essential thing. You want to be covering all of that information. How you do that is up to you. I just gave you an example over here. And if you follow this plan, guys, this alone is an extremely profitable plan. I can guarantee you that. This is a very good edge, but the difficult thing is, can you do this day in and day out without deviating from it? If you can, well, congratulations, man. You're going to be successful in this industry. If you don't, which sadly the vast majority of people cannot, then you're going to be suffering, okay? So that's the key idea I wanted to understand you. I wanted you to understand here. Now, another quick announcement. I'm going to be adding a trading plan channel to the Discord. I'm going to maybe make this a little bit cleaner and easier to read, and I'm going to be dropping this over there. Feel free, guys, to use that trading plan channel for whatever you deem necessary in terms of trading plan, right? Asking questions, maybe you're struggling with understanding how you want to determine your POIs. Well, use that channel. We can chat. We can try to help you out. Send your own trading plans over there. That's going to be fine as well, so everyone can see what members are doing with the information and how they're approaching their plan. Excuse me, and all of that. Sorry for that. So I hope that this makes some sense. Once again, guys, we went over the parameters that were discussed in the previous video, and we sort of worked with them, right? We understood the pairs that we want to be trading, when we want to be trading, how our risk is going to be managed, right? And this is all to do with your tolerance as a trader, what our technical edge is, and the time frames that we were going to be working with, how we determine our structure, liquidity criteria, POIs, confirmations, the daily cycle times as an extra confluence, right? The trade management aspect of it, meaning see your risk management system, because you should have one already. I'm allowed to make judgment calls. I'm comfortable with my potential gains and losses. How I'm going to be journaling my trades. What are things that I need to be asking myself as I try and journal my trade, and all of that. Okay, and at the end over here, you need to sign it. Okay, you need to sign it. Put the date over there and say to yourself, I am going to be following this plan with precision for the next, let's say, 2 months, and after that I will evaluate and continue. Evaluate and continue to tweak things if necessary. Okay. Whoops, I'm having a lot of typos over here. That's fine. I'm trying to get the message across. So guys, with all that being said, this is going to be the end of the section. I think I've covered this topic very in depth and in a very interesting manner. Okay, once again, understand that trading plan channel is going to be available to you as the section drops. Okay, feel free to ask questions in terms of your trading plan. Drop your trading plans, provide feedback to other members, get new ideas from other members. Okay, that's why we work together. That's why we work in a community. So with all that being said, guys, thank you very much for watching this section. I really do hope I did a good job in terms of how you want to be approaching a trading plan, how important it really is in terms of following it and why people fail. Okay, you don't want to be deviating from this. This is going to protect you at all times. If all your executions come from actually following all these parameters over here, you're going to be successful. Please understand that. So now, without further ado, guys, that's going to be it. Thank you very much for watching, and I will see you guys very soon with new sections that are probably going to be dropping. Not too long. Yeah, pretty much very soon. Let's say. Let's keep it like that. So thank you very much, guys. I'll see you soon.